Hi guys, welcome to the Chainlink session. So before I get into the details for new joiners, these are the key areas I'll focus on, and they're based on two key concepts. Also, these sessions are for education and research purpose only and not financial advice. Please take note. So Chainlink. This is the weekly chart and the Wyckoff text for the blue ones and the orange ones. Right now, what we are seeing is, like, after a second test, we have come to this point where we had 1 week of bounce, and then now we are with a red candle again this week. So here we're at a point where, if we look at this red line, it's getting or trying to stay somewhere where the preliminary supply level was. However, it's not. It doesn't seem it's going to stay strong over here. So if there's no particular good or bad news I already mentioned last week, it's going to bounce between the white line and the yellow line. That's how the price would happen. So it happened this way. If we look at this week's candle, right, it hits the yellow line and then it comes back down. So these are the two stronger support and resistance line I see from a weekly candlestick perspective. In terms of daily, it's kind of flat, but it's still somewhat downwards. If I draw, I don't want to draw this line, I want to draw a box. If I look at this like this, so it's still a downward trend, just that it's like not as steep as some other crypto assets. If I string this further like this, it looks steeper, but anyway, in a normal kind of scale, it's a bit flatter. So if I change this, so basically what happens is similar to the short-term playground zone here. The zones can be horizontal or downward or upward. So the price behavior is basically the same. It bounces between the two upper ends, lower ends. Similarly, horizontal, obvious, very big waves. And now we are seeing this flatter wave. So what would happen is, like, so we're at this point, right? It seems like it's heading towards this. Let me enlarge this. So it looks like it's going to head to this point. And this point is around 18-20 cents, roughly 18.15 to 18.20 cents, depending on how the price bounce, right? So it can go slightly upwards to hit this point, and then that's 18.33 cents. If it goes a little bit sideways, that can happen as well. So that would mean a point where it is currently at like 17.70 cents. So that can happen. So after it hits this edge or this upper boundary of the box, what will happen is, if it follows the typical textbook candlesticks flag pattern, there may be a short-term bullish action that breaks outside of the box before it touches maybe this particular support line or resistance line, I should say, currently, because they flip, right? So and then it declines again. So that can be one way that it happens. If not, then after it hits this boundary, it can come back down to hit the lower, and the lower point here is exactly where the long-term playground zone is. So if I shrink this further, you see this white, very long white box, right? So here at about $16, I would say roughly 15.95 to 16, it can bounce again. So that's even more common, right? When you hit a key support level, the price bounces. So it can happen this way. So from a daily chart perspective, that's what I see. In terms of Wyckoff, we already talked about if like there's no more steam, no more demand in the market, obviously the price will continue to decline. But if there are positive news, obviously it can break the yellow or even the purple line and see for a second test or last point of supply. So these LPSY is the last point of supply. It can happen multiple times. Some of them I haven't like drawn them out. There are multiples already, and you can also call these ones as well. So that's how the price actions can happen, and that's pretty much for